is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Good afternoon, traders. Another beautiful, glorious day out here in Clearwater, Florida, the home of TFNN and also the home for technical trading and investing. Another gorgeous day, and it's even more gorgeous now that we have the college spring break over and traffic's back to normal. We have about 14 days where it's really tough, and not too bad. In another couple of days, the Phillies will be gone, and my trip home will be as effortless as the rest of the year. Just kind of funny that they would let an entire parking lot out of a baseball game without letting the other roads ever go through. You know, let a few people go through here and a lot of, the other people on the main road. But they just stop it all for like 40 minutes. I don't understand that. At least I'm not going that way anymore. Anyway, today is Wednesday, March 28th. Just a gorgeous day down here, and it's Barnum and Bailey Day. If you've ever come down to the west coast of Florida, got down to Sarasota, you might have gone to the Barnum and Bailey Museum, also P.T. Barnum's house down there on the water. Gorgeous, nice, beautiful mansion. If I remember right, Henry Ford had the mansion next door to it. One of these huge ornate things made out of granite with priceless artwork in it. Half the statues are of naked people. My brother, a super devout Christian, had to put his hands over the eyes of my nieces and nephews many years ago when they first came down here. I said, well, you better not go to Europe. They went to Europe. Exactly the same thing happened. But it's kind of interesting. But anyway, right next to it is a museum for a carnival and a Barnum and Bailey. And, of course, they winter down here in Sarasota. And all the elephants and animals get to come down here with the people that work with the animals. And pretty much get to take, I guess people still have to feed them and everything. Yeah, the Ringling Museum. And it still has to be, it's just a neat thing to go down there if you get down to Sarasota. But anyway, they were down there forever with, and kind of neat to see what really rich people look like in the 1920s before everything went to hell in a handbasket. On the radar, the Affordable Care Act is still being debated in the Supreme Court, but kind of the only breaking news is that it looks like every single justice is not about to get into the 2,500-page bill and start figuring out what will and won't be carried forward if they basically rule out the mandate for buying it. The Chief Justice basically said there's not a chance in Hades that they're going to link these two just because of the enormous size of the bill, getting into what would and what wouldn't be affected. And it pretty much said that now there's no way we're going to get into reading 2,500 pages. So it looks like when this does come out in May, first week in June is when they're saying their opinion is going to be ready. It will be all or nothing on this, and probably affect a lot of housing stocks and pharmaceutical stocks. If you believe the people that watch the Supreme Court, 80% of the time they vote the way that their questions lean. I always thought that the prevailing wisdom was that they were playing devil's advocate many times on these, but one of the guys that wrote a big long book says that 80% of the time they pretty much follow the way that the questioning goes, at least for this current Supreme Court. But we're going to see that in June. But probably if you're reading the news, and I've been able to listen to only a little bit of what they were talking about, doesn't sound good for that act. Today we have the S&P down about 10, off almost 20 on the NASDAQ at the moment, almost off 90 on the S&P with very, very, very light volume. I tweeted out to my subscribers today that we had about 1.7 billion shares on the consolidated New York Stock Exchange tape at noon. We have, 900 million in the last 3 hours. Just not going to be a lot of volume at this pace. We're coming out for 3.1, 3.2 billion shares. Looks like we came down to test the 1400 level on the S&P, and everything makes it look like there's at least one more pop in this thing, and I think it's 1425 area. Maybe we'll do it all in one day, maybe on Thursday or Friday, but certainly every reason for big fund managers to paint the tape on the close on Friday, and I suspect we're going to do that. For movers today, Netlist, NLST, was up fairly strongly. In fact, actually, I've got these all set up here. Let's see, Netlist is, it's actually come back a great deal. It was up about 4%. Now it's back to flat. One on a patent ruling. Zoltec was another one that was up. It's still up 9%. I think it was up a lot stronger, yeah. $12.10 for a high earlier. But still up strongly. Zolt companies, they make carbon fiber parts. From my understanding, a lot of it was for aerospace, airplanes and the like, and now they've got a big deal with Magna, a big part supplier for manufacturers of cars, for making carbon fiber parts. Carbon fiber parts weigh about a tenth of the steel of the steel part. Normally 3 or 4 times as expensive, but just the weight savings and the actual strength, pound for pound, I think it's 10 or 20 times stronger than steel when made correctly, and why they're used so much on aircraft out there, weight. And as we get into more and more cars that are dependent on fuel mileage, if you can reduce the fuel, the weight in a car, you're going to get better fuel mileage all along. So we're going to start seeing more high-tech parts in cars coming out from Zolt. Vermilion has a test for diagnosing ovarian cancer patients. They did come out today. They're up about 20% VRML. And I think that came from a European finding that allowed them to sell their test out there. Amylin also up on news. They rejected a $22 bid by Bristol Myers Squibb about 3 months ago, and I guess the report just came out today, so everybody's thinking, hey, that's the deal, and they're up 50%, around $23 as we speak. Other stocks out there getting hammered today: First Solar, Trina Solar, JA Solar, SunPower, all getting hammered because Italy came out and said that they're totally done with any of the subsidies for solar power companies right now. What do we have them down? 4%, 3%, 5%, 3.5%. All those taking yet another beating. Of course, solar power, or First Solar, has been one of the ones that just absolutely smacked over the years. It's going to be surprising to see any of these companies survive probably through the next year if subsidies do not come back. Jobs bill passed. I think that was it was Tuesday. President, I think, signed it last night. I didn't get to follow up on it. The jobs bill had a lot of things in it, but a lot of things that are going to apply for investors. It's really going to allow people with smaller companies to go public. A lot of stuff that came out in previous incarnations of bills from Congress made it a lot tougher. It's going to give less oversight for the SEC on small IPOs. It's going to allow crowdsourcing. Before, you had to have certain net worth to get in on any of these companies. And it's going to allow people to invest, I think, as little as $5,000. So a lot of these companies that want to get started are going to be looking at investors. I'm kind of worried about this, especially for the same reason that Congress was. They put in a few more rules to go after it, and especially websites are going to be that are involved in what is called crowdfunding. That's going after a lot of small investors instead of a few very large ones. But this is going to raise the 500 level right now, where if you have 500 investors, you have to basically go public. It doesn't make any sense. It's less expensive than to remain unpublic at 500. To 2,000 shareholders. This still will not fix what Facebook has. They're way over 2,000 shareholders now, so they still need to go public. But this is going to make a lot of companies come out at a much earlier level than they've ever come out before. And we're going to talk a little bit more about that in the show. But just beware. We've seen some of these leveraged ETN notes blow up here lately. This is probably going to be ripe for a lot of companies and swindlers trying to get over on people. On the IPO calendar, Annie's came out today. New symbol is BNNY, and it was up very strongly today. See, Annie's, what is it, $34, almost $35 right now. Was priced at $18. Again, and we're going to get through these in just a second. They were only trying to raise $85 million. There was no reason for them to come out for $85 million. They could have easily borrowed the money. So you always have to wonder why a company is coming out for an IPO. Do they really need a huge amount of money, 2, 3, 4, 5 billion to expand their company? 100 million is not that much. It is less expensive to go out there and do an IPO. But a lot of times the original investors or principals in the company want to cash in a bit in the value of the company. They only have like 35 locations. It's not a big company. That they came out with such few shares is another reason that they can pop these things. And as time goes by, we'll continue to dump additional shares on the marketplace. So again, this is a lot of these little sliver deals out there. Be very wary that there's a lot of sellers still in the wings that won't be able to sell. You've got about 180 days before the lockup comes out on this one. Also today was regional management. Symbol on that is RM. Let me pop that up real quick. I think that came out pretty flat when I was watching it earlier this morning. Yeah, $17. I think it came out priced at 16. Not a whole lot. The last one was another one that really popped big. VCRA, which is Vocera Communications. They actually make phone systems for hospitals. Apparently, they're doing very well. And but yet another sliver deal out here, $22.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we were talking about IPOs, mostly because there's just such a huge herd of them. They're trying to push them all out before Facebook comes out and sucks up all the oxygen out there in the world, because I think they're probably going to suck up about $10 billion real quick. And when you look at these IPOs, they're all about $100 million, except one, which is a little bit larger. We'll be talking about here in just a second. If you want to give me a call, you can always give me a ring at 877-927-6648, and we'll discuss your stock or what you want to think about. Maybe a broader issue out there. Tomorrow we have Cafe Press, CPRS coming out. Merrimack Pharmaceuticals also. Its symbol is going to be MACK. Millennial Media, $122 million for it. The only big one we have actually coming out, and I mean big is relative, at $450 million they're going to raise tomorrow. They could still probably, it's not beyond the scope of borrowing $500 million in these markets. Rexnord, RXN, is going to come out with about $450 million. That even continues into Friday. Enphase Energy, ENPH, is going to raise $80 million. GasLog, which is the one that kind of interests me, because with natural gas at such extremely low levels, these guys are, if I read it right, are going to be making custom ships to take liquefied natural gas They're going to be raising $400 million tomorrow, and that's GLOG. I'm going to watch how this thing trades for probably a few months, but they're going to start using that money to buy a lot of these ships to start moving around a lot of our excess gas. And why it's extremely low, probably some good money in building ships specifically to move natural gas to other areas of the world that can actually use it. Maybe we can start exporting some of it, and maybe the price of natural gas will get up off the floor, although it looks like it wants to go down to maybe $1.50 or even a little bit lower, maybe by the end of the summer. A lot of that has to do with the way that the current administration is changing EPA rules for how much carbon you can actually output, and just having a problem actually distributing natural gas without pipelines and a lot of the other stuff that goes in. Just physically moving it around is tough if you don't liquefy it. Some other things. The last one for this week is Luca Technologies, LUCA, and they're going to raise about $100 million tomorrow. So a lot of these little IPOs coming out in front of basically the next few weeks. But I think while we don't have a date for Facebook right now, I suspect the third week of April to the last week of April. If you do have a little bit of extra time, there's a man making the rounds. He's committed to be on the show. We just don't have a date yet. His name is Joshua Brown. He wrote a new book called Backstage Wall Street. And he talks a little bit about how these ECNs have been working, and almost the easiest way to spot a lot of these is how much the people that actually run them make. The people that make more money, or the people that as one of these entities or trading vehicles, the more money that the person that actually runs them make is generally proportional to how much these things blow up. And you can go check out his website. TheReformedBroker.com used to be a Wall Street broker, now runs a little hedge fund. But he's kind of making a common sense approach on how a lot of these things should be handled by Wall Street. And he thinks that you could probably make more money instead of screwing over customers and calling them Muppets by probably treating them like customers like the rest of America does out there. Yeah, you don't want to, unless you're a tobacco company making a product that kills your company, normally you don't want to be doing something that's detrimental to your well-being. Kind of killing the goose that laid the golden egg. But anyway, maybe a week from this Friday, we're going to be setting it up and talking to him. Also, in the light of the changes that we've seen in the jobs bill, that's going to make it a lot easier for these companies to go public very, very early with very few, or let me put it this, with more smaller investors. Y Combinator is out there, and we'll get into it a little bit more when they come back. Give me a call at 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2 week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
This week is Y Combinator week. Y Combinator is kind of a loosely affiliated bunch of investors, vulture capitalists out on the West Coast. What they do is they normally get about 50 or 75 this round, about twice a year. They got 65 startup companies. They give them $15,000, $20,000. This segment they gave them $18,000 on average. And what do they give them 90 days and access to a lot of people that have been through bringing a company public, developing ideas. And at the end of the 90 days, this particular week, they get to present a prototype of their product to investors at a big conference. So this is one of probably the thing that makes me feel real good about America is we are actually, have places for people with very meager financial reserves to actually get started, get enough money to show what their product would be, make a prototype, and then put it in front of other investors to get their feedback and also maybe get possible funding. This seems to work very well, and there's probably 5 or 10 companies that I know, probably the layman wouldn't know, but that have come out of this that have actually done fairly well and gotten to a fairly decent level of success. I think it'll probably be a few more years before we see a lot more of these companies going public, but they've been around since 2005. But pretty good. Anyway, there were several companies that caught my eye. I watched some of the YouTube videos on them. PlanGrid is a company that's going to allow people in the construction industry to share blueprints without having to invest in printing and reprinting plans over and over again. I don't know. Maybe there's a lot of money in that. That's kind of hard to tell. Flutter is another one. This is the one I think that has the absolute best chance of maybe one day becoming public and us making a lot of money out of it. And, of course, maybe even investing early in it now that the jobs bill's out. Flutter allows people with kind of a kinetic interface to control their PC. But instead of having to buy a $250 kinetic device, they're actually using just the webcam of a regular PC like a laptop. Kind of cool idea. Any of those natural user interfaces kind of catch my eye. The most exciting one that I found, though, was a thing called Matterport. It is like a kinetic. What it does is you walk around with this kind of camera in like a room or around an object, and it will actually suck in everything around you and create 3D models of it. Very, very cool. If you check out their website, you'll kind of see some of the examples of what they do. But this thing is kind of like a little stick they have, and it's kind of like a fairly inexpensive product, it looks like, although they haven't announced the money. But I could already think that people that are doing things like, murder scene investigations. You got to think that next season we're going to see this next fall on CSI Poughkeepsie or CSI Peoria or whatever CSIs are still around next fall. But it is very interesting. I could think architects, people in the housing industry that really want to be able to walk right into a room and see how everything's laid out. It would actually give you the measurements of a room. You just walk in, kind of spin around a little bit, and the thing creates a 3D model. You move to a few corners of the room. It can't, of course, see behind anything, but it very, very cool idea, especially if you've been involved with animation in the past. I know my engineer Alan has been, but being able to make a 3D model out of something that exists today, not just scan it with a laser, but actually walk into a room and get the measurements and everything. Very, very cool idea. I think that could be a very hot product one day. Let's see what else. I want to talk about a few things. I hadn't checked out how well Amazon was doing today, although I did want to point out a few butterflies that we're setting up. The first one is, let's see, I've got to have it here. Amazon, AMZN. Let's see how that looks today. I haven't watched it too much more. I guess it's probably going to be about right. Let me pop this up. I should have a nice little, maybe it's on 1 year. Let me find it here. Maybe that's why I was doing this. Couldn't remember what year it was on. Let's go back to the chart I had. Yeah, but it looked like it had pretty much completed a Gartley pattern. Let me go back to my nice pre-made chart here on it. It pretty much did the 128 retracement on it and finished that up yesterday, pulling back a lot more today on Amazon.com. But kind of a nice little setup on Amazon. 199.66 back in. What is that? Looks like around the first or the end of November. Started that pattern out if you want to go back through it. But the target was 208.55. Hit 209.85, which is probably within the margin of error most of these Gartley bearish butterfly patterns putting up. But the energy, not all that horrible, but certainly looks like it could come back to the original B point on this, which is 196.50. I didn't even check what that was today. So we'll go back here just one quick chance and check that out. AMZN. 201 and hit 207 as a high today, off 2%, but pretty good Gartley pattern. If you're trying to learn Gartleys, probably a good example right there. Actually, there were two different patterns on Amazon. Hopefully you're watching on Tiger TV. You can watch both of them now. Of course, if you got my newsletter, you would have seen these already. But the 222.35 high back in actual November also started another one. Both of these came out fairly close. Its target was 210.50. So you had literally two different targets that were showing a Gartley pattern, both a Gartley and a bearish butterfly, both setting up on these levels depending on where you started looking at them. So kind of a good example of if you're looking in Tom's book, you can get 2 for 1, both a Gartley and a butterfly out of Amazon. And that kind of stops all that. We'll go and look at some other stocks here. One of the other ones I wanted to bring up while we were discussing a lot of this and watching the market, let me get this cleaned up just a little bit, was Coca-Cola Company. It looked like it was getting ready to test this high. Looks like it's going to break out on volume if these numbers are correct for today. It was challenging the September 8th high. That was $71.71, 12 million shares. What do we have? 30 minutes left in the day? 20. Maybe it won't make it. A little over 10 million shares as we speak for Coca-Cola, KO. We'd really need to watch it. Certainly not going to be extremely short on volume, but it looks like it's breaking out. And we're seeing some of these safety companies actually hit these highs and come back and look at those. I wanted to check on the market. Like I said, the volume down here, and I tweeted it at noon, was just going to be way too low to break out anything. We've got a lot more IPOs over the next couple of days, tomorrow and Friday. We have every reason for them to paint the tape on the close on Friday. I think if you're looking at a pullback, it's going to be next week, and I'm still looking for 14.25. But we are seeing some of these safety stocks like Coca-Cola. Looks like it probably will get maybe 11.5 million shares today on Coca-Cola. KO is the symbol. Take a look at that one. But that nice high on September 8th is being broken. What do we get up to? Good buck over it today. So that's going to be interesting. On the auto front, I saw another one that looked like it was, I had it in the newsletter yesterday, another one that was hitting and testing a high. Of course, I kind of use a standard Wyckoff pattern, which is, did it go over the previous high? Did it go over with less volume or extremely less volume? Did it close back below it? And normally the confirmation is today. CarMax Group did that. KMX is the symbol. The one I was looking at is this 3.2 million share high on May 2nd of last year. $35 even, 3.2 million shares. We got to a high yesterday, $35.17, 1.1 million shares. Wasn't very surprised today when we started seeing this one pull off, especially when you see the intense energy that it came off that May 2nd high down to the June 10th low of last year. A lot of energy. If you can't see it in the charts, I have a 4.5 on my power law vector indicator. As we go up in this last little segment, it's a 2.9. So probably off about 30% on the energy driving this thing back up to the top. Not surprising that testing the previous high that we were looking at here on 1/3 the volume, that energy was off 70% on the way back up. Once you turned over on this, that you were probably going to see a turn down. Another one I showed in the newsletters yesterday was Quillic and Safa. Click and clack kind of always go together. Both of these at the same time were giving some fairly decent signals that they'd hit some highs. Of course, they make a lot of the equipment that makes semiconductor chips. They make a lot of the technology of packaging them, of making the silicon once it's made, put it into the plastic cases, the technology of building a chip. Click and Clack both, you can pretty much see that both of them making the same high. But I did have those in the newsletter this week. May 12th high, $12.72, 2.7 million shares on May 12th of last year. We got back into it here. It is on March 26th, got to $12.78, but just a little less than a million shares. Another real good sign that this thing had probably hit high. The energy coming down again. We had strong energy down to those lows. Do I think this thing's going to blow up? No, but could it come back to about 1080? Probably not a big deal. Clack, though, since both of these give signals the same. Oh, we got a phone call. I'll try to see if I can't pick this up. Just a second here. I've got to move a few things around here so I can actually see. We've got Lewis from Boston. How you doing today, Lewis?
Good. How you doing, David?
Great.
I have a question on Demware.
Yep, Demandware. Yeah, they're a recent IPO.
Yes. You were talking about recent IPOs. It looks pretty good. What's your personal opinion? Is it too early to get into it, or is...
Well, this is another one of those sliver deals. The question is, are you going to trade it, or if you're going to invest in it? And my problem
I would invest it in.
Huh?
I like the company. I would invest in it.
I would say not, because almost all these companies have the same problem, and that is 180 days after they come out, there's going to be massive amounts of shares available on it. Okay. I mean, this is nothing more than musical chairs, where they put two chairs out and shove 1,000 people out there. You know, can you trade this? Yes. I would go back for a good model of this, in that it is a good company. I kind of agree with you. I like the company. I don't like the stock after 180 days, and I think this is going to model itself very close to MCP if you go back and look at that chart. MCP came out. They had a 180-day lockup. I think their shares started really hitting right after January last year. And, you know, you can see what's happened in that stock since they really hit the high and the shares were really truly available, and then the prices of rare earths kind of came back into it. Demandware probably not going to have the same kind of volatility that this has, but I suspect you're going to see some kind of big high out here about 180 days from now, and you're going to start seeing a lot of that stock come on. So I think you're probably okay for 180 days to trade this thing, but after that, you're probably going to have to wait another year for all those shares to come out and the thing to get flat. They are a company much like Salesforce.com, a little smaller, but certainly in the right sector, and everybody wants to love them, having a huge day out there today, but certainly not on volume. You want to hang on through the break?
Sure.
Okay. We'll be back in just a minute. Demandware, another one of those IPOs. Everybody, in fact, I can't find hardly any of them that aren't pushing out just a very, very small amount of shares. And we can look at MCP as the model for what happens when those shares do become tradable out there. We'll be back in just a minute.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, when we were talking to Lewis about demandware, and the one thing that I say that you, on these new IPOs that you also want to check is go back through their prospectus and find out whether the underwriters can bail at any time. One of the things that I did find in Zynga's IPO was just that the both, I think it was Morgan Stanley and Goldman Sachs, can both sell at any time they want their stakes. They're actually putting together a secondary already on Zynga. That's what you really have to watch on these companies, as you know, is the underwriters going to bail on these guys and run at the first sign of trouble? If the market really got in trouble, Could you get hammered on this? I want to make sure that most of those things are already out of the way. And a lot of times, even though it would have been a great trade here today, it would have been a trade, and I don't think it would have been an investment on demandware. But I'm going to go through and look about that. I had a question at the end. I thought I answered it. Facebook due late either third or fourth week of April right now. The reason why is that if they get in, I think it's May 15th, mid-May, they would have to file all the same paperwork, and everybody would know all the same thing about their books and their income. Most likely, everybody's talking about that actually coming back. The red herring's gone out. It has come back with basically the SEC marks it up, asks them to explain some things in the way that they put it out there. I think you may have seen it yesterday or the day before. Facebook actually said that the lawsuit with Yahoo might be a material impact to their IPO, but they're not going to actually be dropping that IPO at the same time. So, there's probably nothing more important to Wall Street right now than jamming Facebook out to the marketplace. And for that, they're going to need a nice frothy market. So I'm thinking that we might have at least another 30 days to go up to a decent top, or maybe even just go sideways up here for a while. Yeah, I mean, we've got these IPOs pushing out with no shares. They're certainly putting the chum in the water for the Facebook IPO. Like I said, the money they're going to make off Annie's, raising $80 million is pretty light. The reason for all these IPOs is, one, these companies do want to go public, and two, chum the waters for the Facebook IPO and some of these big ones, where these guys are going to make $100, $200, $300 million. I bet that there's probably close to $500 million in Facebook money for the underwriters. And I think there's going to be 15, 16 underwriters for Facebook. So everybody on the street's going to be at the feeding trough, and their piglet snouts are going to be in it. Maybe Tom will have a comment on that after when he comes on here in just a few minutes. But just be wary out there. We've seen those things like the ECNs blow up here in the last few days. It gets frothy like this. It might continue a little bit long. I wanted to just check in here at the end here and see what our volume looked like. But certainly looked like the pullback we had today, again, on very light volume. We want to go back up and test, I think, 1425 or maybe a little bit more. I think when this thing actually ends, it's going to be with a bang, not a whimper. I don't think we're going to go up there. I think we're going to pop 20, 30, 40 points. It's going to blow every short out of the water, and then that's going to be it. Just personal opinion, no real technical aspect on it, but markets like this, when I see those IPOs run, basically raising chump change out here, and just the 4-5 today, 4-5 tomorrow, getting out before all the oxygen sucked out with Facebook. Just a lot of that. Anyway, you have a great day and a safe day.